Hi, everybody. Welcome. Thank you for joining me tonight for this Unlocking KiwiSaver webinar. My name is Paul de Klerk, and today is the 29th of August, 2024. In this KiwiSaver webinar, I'm going to talk about what we can do as KiwiSaver members to help increase the performance of our funds. So for me personally, my own KiwiSaver, the account grew by nearly 400% since March 2020. Back then, I used my KiwiSaver money to buy my first house in New Zealand. And so then I had to start my retirement savings from scratch. So I'm going to talk about the investing principles that all KiwiSaver members should understand so that they can try to get some better performance out of their money. There will be some Q&A time at the end, but please just try to hold off on questions until then. It's just a little bit tough for me to monitor the questions while I'm going through the information first. So I don't expect this to take more than about 20 minutes. So let's dive right into this and see how we go. Just trying to let some more people into the room too. Okay, so going from here, moving on. So just a quick disclaimer, nothing in this presentation is intended as personal financial advice. Information is presented of a general nature and reflects the opinions of myself as an investment advisor. Before you make any financial decisions, just seek personal advice. You can get a full disclosure from me on my website, but if you need personal one-on-one guidance, feel free to hit me up on the website for that. Okay. So, KiwiSaver, how your money grows. It's important to understand the context here because your KiwiSaver money really grows in two ways. Number one is the obvious one, it's regular contributions. You putting in money, so is your employer, so is the government, things like that. But that's not really what I'm talking about tonight, trying to increase contributions. I'm talking about the second one. That's the performance of the fund and what sort of decisions we can make as the members, as the people holding the account, what decisions can we make that have a direct influence over the performance of the fund? Pros and cons, positive and negative, because the money you're putting into your KiwiSaver fund, they are buying assets for you with that money. And so there are decisions that people make that have an influence over this. So just very quickly, there was an interesting article yesterday in the New Zealand Herald. So it was quite timeless considering what I'm wanting to talk about. So this they're talking about the KiwiSaver fund that has returned nearly 400%. Talk about timing. So it's just interesting to read through, and you can see here. Oh, let's get rid of the advertising if I can. Click. Oh, I wonder let me click past it. Interesting. Anyway, they've given some information in here about Milford's, and they're talking about how it is the number one performing fund, which is good. And look, they have about 11.65% growth on average per year, with a cumulative growth of 385%. But what's interesting here? If you read an article such as this, and you don't have the wider concept of greater amounts of information, you need to just understand as well, while this is very good and an important bit of information to know, they are referring to Morningstar data. And you need to know then Morningstar does not monitor every single KiwiSaver fund there is out there. There are obvious ones that come to mind. There's one called NZ Funds, right? NZ Funds, they returned well over 12% in the same time period. And so well, I'm glad they're getting information out like this out there. Don't try to be a Lone Ranger client and trying to decipher this information yourself. Just understand the context of what's going on. People still entering the room. So let me just click the admit button. Okay. So this is a really nice article to read through and just try to get some context about, KiwiSaver is doing very well in the country. And so have a look at that and look at the NZ Herald article there. I also have some information though in my own blog. I do my own research, trying to keep my clients abreast of what's going on with performance. And so this is my latest from the last quarter, my latest report showing the top 10 or the top growth funds in the country, but not just ones I monitor, everybody. NZ Funds continues to be the number one. They've been there for a very, very long time now. And for the last 12 months, Milford is actually down in 10th place. A lot of people have performed better. And yeah, well, you can actually go and sign up for my market updates if you're wanting to keep abreast and keep up to date, because I update this all the time. You can click a link on Just click on generate. You can click on generate and it will go straight to the source information, things like that. So good handy information there. But now, KiwiSaver. Let's talk a bit more about this. It's important to note KiwiSaver is not a saving scheme. And it's a bit counterintuitive now. But KiwiSaver has nothing to do with savings. This is an important point because it's not like a bank savings account where the money just sits there earning interest and growing, right? KiwiSaver is an investment scheme. So if you ask me, I would have liked to call it Kiwi Invest, but I didn't make that decision. But look, your provider, they take your money and they invest it by purchasing assets on your behalf. So now this instantly means that you are exposed to volatility. Volatility is markets going up and down. Now, a saver's mindset is very different to an investor's mindset. And if we don't understand that difference, we tend to make very not the best decisions for our KiwiSaver accounts. Let's just get into this a little bit more. A saver's mindset. Savers typically put money into a banking account. The money grows by adding more savings and earning a compounding interest rate. They have a very low risk tolerance. By that, I mean, they do not want to see volatility in their savings. They only want to see the savings go up, never going down. And so they don't tend to think very long term either. They think in short terms, like less than 5 years, because they want to access their money soon for something specific, like buying a car or going on a holiday or things like this. Whereas an investor, they now think differently. Investors, they're looking to put their money to work by purchasing assets such as property, bonds, stock, these sorts of things that your KiwiSaver will invest in for you. They have a higher risk tolerance than what savers do because investors, they expect to see ups and downs in their account. With the understanding, though, that in the long term, those investments will likely outperform a normal interest rate that is on a normal savings account. So investors understand that when their accounts go down, which will eventually happen at some point, it goes down, it means the markets out there are down, and that is then an opportunity to buy more assets cheaper. So markets, they go up, they go down, they go up, they go down. It's during these downturns where people would rightly, and especially if they're doing KiwiSaver on their own without anyone to seek guidance from, they tend to get very concerned during those downturns. And so, moving on from there, when those downturns do happen, which they invariably will do, the DCA strategy is the one to keep in mind. It's the power of dollar cost averaging. So, I get the question all the time, Paul, I have my KiwiSaver account. Are there certain times when I should be putting in money? Is there a best time to buy in? Things like this. So, what they're trying to do is to time the markets. They're trying to think, okay, markets go up like this, they go down and they go up, they go down. They're trying to ask me, where do I buy? How do I pick this? But now it's not about timing the market, it's about time in the market. Holding strong in the long term, especially when markets drop. So if markets are going up, then they're going down. Your strategy is to keep on buying all the way, even when it's going down. Time in the market, dollar cost averaging. I do have an article about this if you want to read up more information on my KiwiSaver Spotlight newsletter where it talks about, let's just say you've got $10,000 that's of lump sum that you want to spend. Instead of just adding all of that into an account in one hit, let's just say you divide that by about 12 months and you do $1,000 a month instead. That means when markets are going down, you still have money to be able to buy as assets are cheaper and assets are going down, right? And so this helps you to earn more money in the long term. Flying through this information. So, volatility. This is the thing that is the key to growth, to long term investment growth. To explain, volatility is the rate at which the price of an asset like Microsoft, Google, Nvidia, all these things, they increase and they decrease over time. The higher the volatility, the greater the potential risk and also the greater the potential return, right? And so being exposed, higher volatility works the best for growth if you have enough time in the market. If you know you're going to access your money in the next few years because you want to buy a house or things like this, or you want to retire next year, this is not the time to be using a growth fund or to be seeking volatility. You'll go more conservative. So let me demonstrate, looking at an actual market chart, what it is that I mean. So this is the NASDAQ. I'm looking at the NASDAQ simply because, um, especially growth funds in KiwiSaver, they will buy a lot of growth stocks that are sitting in the NASDAQ in America. This will be your Google, your Microsoft, your Apple, your Netflix, things like this. But now have a look at this chart. The bottom here shows the dates. It goes, this is 2020, it's going up to the current day. Each candle on this chart represents 1 week worth of price movement, and the price index is here on the right-hand side. So let's just talk about what it is that I've been trying to ram home here. This tiny little move looks tiny like this. That was the COVID disastrous drop where I had so many people contacting me, so concerned about their KiwiSaver accounts. That drop was a 30% drop, right? So many people as well that I've subsequently met during that downturn. A lot of, especially I found mortgage or insurance brokers, the sorts of people who sign so many people up to KiwiSaver. They do a great job signing them up, but they're not providing much guidance, in my opinion, what to do when you get a drop such as this. Dollar cost averaging. If you continue to purchase going down and you continued to just add into your positions and add into your fund during that downturn, buy. Now, how long will it take when this market turns around? How long did it take before you broke even and actually you were in the profit again from all those contributions? Interesting. The low was the 23rd of March, 2020. How long did it take to break even? It's actually that candle right there. 1, 2, 3 weeks. You've already made your money back. The lesson is this: when markets are going down, continue to contribute. But even if you didn't, and you just held strong in your growth fund, look at the return that you were able to earn. This is how investors think when they're trying to make money out of this market. If you did nothing and you didn't contribute anything at all, you can see that upswing that happened there. If we look at then the return that happened over that period of time, there was, let me get it out the way, almost 150% worth of return, except if you shifted to a conservative fund during that drop, you would have missed out on a lot of those gains happening so fast. It would have taken a lot longer for you to make your money. And so, if somebody to lean on and talk to when those market movements are happening is the key to this. Then let's just say that's not a one-off situation. What is all of this about? So this is all of the 2021 and 2022 inflation drama that caused all of that market movement going down. A lot of people that's contacted me switched back to conservative funds because they were so worried about this drop happening. And so that represented a quite big 37% decline in the market, which means the average KiwiSaver account out there as well took quite a hit. But again, if you continue to buy during that downturn, you can break even when the market hits there. And so there you've broken even. And what happens? The same thing happens as what usually happens. The market continues to tear away from the low to the high. That return there, whoopsie, let's just get it here. That return represented 98% worth of return. But remember how I said that it's about time in the market, not about timing the market? So if you just look at the last 5 years worth of movement, what sort of growth has there been from that low to that high? If you just contributed absolutely nothing, and then you just stayed with your $1,000 sitting in KiwiSaver after you bought your house, the sort of move just from this one market, that represents 204% worth of return. How you get the nearly 400% is that there are people making active management decisions in your KiwiSaver account. This NASDAQ market is only one market that we look at. And so something to note there, interestingly, during these crashes, you would call those black swan events. The reason I'm personally with NZ funds is because they are the only ones out there that have a downside mitigation strategy. Big, long way to say that when those markets drop like this, They have options contracts that they own in the marketplace, which means they get paid out lots of money when markets drop like this. When you see drops like that, typically what happens is that there are people out there making money, because what's moving the market are traders in the market, not just investors trying to buy. Traders are making this market move. And so the average KiwiSaver account in New Zealand out there dropped roughly 30% during COVID. The NZ Funds one was 17% worth of drop. All that money that they made out of that move, they airdrop into their clients' accounts. It's one of the reasons why I like them. And so there's a lot of really good information more about things like that. But again, if you need guidance, let me know. But that is now the key of trying to get long term into the market. So there's not a rocket science to this, is there? It's actually makes a lot of sense if you understand what happens with markets longer term. I always say, try to not be a Lone Ranger KiwiSaver member. If you've been signed up through your bank or through somebody this is not their core business, it's not the core what they do, like a mortgage or insurance advisor. They do great work in that space. But I'm a specialist KiwiSaver advisor. This is what I focus on. It's where I earn my bread and butter. But I'm free. All right. To talk to me is completely free. If you want to join my KiwiSaver family, welcome to have you along here. I'll be very grateful to look after you guys and give you some valued guidance. There's a apply button. It looks like this actually. If I click on it, the I have a little apply section to my website. It's just an easy form with the information that I'd need for you to join with me and the Kiwi Savers that I use. It's just the form's just busy loading, but at the bottom you'll see just some personal details and some information about your work, so I can work out your tax rate, things like this. And then there's some frequently asked questions at the bottom. And so, yeah, but if you need to speak to me, I really enjoy having a one-on-one with you first, just to understand you better, know what your personal goals are, what you're trying to achieve. Are you trying to save for the house? Are you trying to save for retirement? What is the goal? Because that can affect what you're trying to do. It will load up over here. It will just take a second, but there is a form to load here to see it's still busy loading. If you just book a day and time that suits you best, it will show you when I'm available. Right. Summary. Think like an investor, not like a saver. That's an important point. So when the markets are down and your Kiwi saver is down, try to keep your emotions under control, and better yet, call me. I'm not hard to reach. You've got access to my diary. We can speak one on one, and I can give you guidance on what we can expect to happen next. And so, just when the markets are down, understand this is a long-term game going after volatility. And so try to keep contributing so you can buy more of these assets and stock cheaper. Okay, got long-term dollar cost averaging is the key to success, to long-term success. And again, like I say, seek guidance from me if you're concerned or you don't know what to do. Right, I said I'll try to keep this to 20 minutes, which just on there. I have some Q&A time available if anybody wants to ask me any questions. And so hopefully I've been eloquent enough to try to get my point across. But you can see, this is not rocket science, is it? Time in the market is key. Just when the market is moving and you have a look at the balance sheet, or you just have a look at the balance of your KiwiSaver, you're not used to reading markets or looking at candlestick charts or trying to know what investors know. Lean on me, seek some guidance from me, and I'll give you some information. Okay. Any questions out there that anyone wants to ask me? Now's the time. Please go ahead. I'll just give it a minute or so if there is.
Hi, Paul.
Hi.
Kevin, yeah, how are you?
Good, mate. How are you?
I'm good, thank you. Just a quick question. I work for an insurance brokerage, so I recently started there about 4.5 months ago. And
Okay.
now with the KiwiSaver there, would you be able to manage that, or does it have to stay with the work, or how would that work?
Well, look, it's enshrined in law. You can go to whatever KiwiSaver provider you want. Okay, so if you want to come with me and the providers that I use, I mean, I have a vetting process. I only want to use the ones that have passed my process, passed the sniff test for me, and
Okay.
so I will use certain ones for my clients. For example, I'm not a fan of certain ones out there, and we can speak one on one about that. But I'm always monitoring performance. You can go to
Okay.
whatever KiwiSaver provider you want, Gavin.
So how would how would that work? Like, I mean, they contribute every week or every second week.
Yeah.
So the management, like at the moment, I'm not quite sure how it works. Do they manage it? Um, if you start to manage it, would they still contribute to that fund, or how would it work?
Well, the way it works is when your employer is paying their contributions to your fund, they're not
Yeah.
paying it directly to your fund. They are paying it to the IRD. And the
Ah,
IRD is the one who's then distributing it into your KiwiSaver. All right. There's
okay.
also a lot of people working out there in their jobs, and their employer might have signed them up for KiwiSaver using an
Yeah.
IRD form. Then what
Yes.
happens is you fill in that IRD form for those employees, and then the IRD will randomly drop you into one of the six default funds. The idea is that you would have some opportunity to go seek guidance from somebody like myself. Think of it
Okay.
like a temporary placeholder. But
Yes.
long story short, your employer is not paying directly into their fund, KiwiSaver, they're paying it to the IRD. The IRD is dropping it into your fund.
Okay. No, I understand better now. Thank you.
Okay, all good.
Okay. All right.
Thanks, Gavin. Go well, mate. All right. So
Hi.
another one. Yeah, yeah.
I just wanted to understand about the, the various choices you have when you asked, when you join the KiwiSaver. Do you want to join this scheme, that scheme, the next scheme? How do you decide how to choose?
Right.
Do you
Great
know what I'm
question.
talking about?
Yeah. Everyone's position is a little bit different, Chanel. So what I'm looking at is risk tolerance versus risk capacity. That will help to determine now what is the appropriate fund to be in. By that, I mean, should you be conservative? Should you be more growth orientated? And so it will depend somewhat on your own personal situation. If I'm looking at a certain provider, what I'm looking for there is long-term consistent performance, right? So referring back to that in the article I showed you from the Herald earlier, and
Yeah.
so they were referring to Milford's there, and then they were referring to Milford being the number one performing. They actually are not. NZ Funds long term since inception is still performing even better than that. So that's an interesting side note. It's just that Morningstar does not monitor or have a look at NZ Funds. It's not part of their panel that they would look at. But
Okay.
yeah, I'm looking at long term consistent performance by good quality managers. Now, I am not a KiwiSaver provider myself. I'm not the fund. I work for my client. And so I'm looking to providers such as NZ Funds, Milfords, Generate, whoever. And so I'm just always trying to hunt down the best possible place for that I feel would be for my customers, right? So where you treat it best. I have this motto: you go where you treat it best. And
Yeah.
so, and this is because somebody might be the best today, they might not be the best tomorrow. Example, the moment, Booster, who's a very large KiwiSaver provider, they currently are sitting with charges laid against them by the regulator, 75 charges. Now, these charges are rather of a serious nature. And there's two ways to look at these charges. It's the regulator themselves who are suing them. Now,
Okay.
you can either think to yourself, look, they are innocent until proven guilty, which is
Yeah.
true. Yeah. It's absolutely true. However, I fall on the other side personally that thinks, well, where there's smoke, there's fire. Why take a chance? They're not the only ones out there. I would rather just move my client to somewhere where I can have a little bit more certainty without that cloud hanging over them. You see, things like this, I'm trying to keep abreast of what's happening in the industry, in the space in New Zealand, and make people aware. I hope I've answered your question there, Chanel.
Okay.
Um, Thank you so much for asking this. So I've got one here from Ernay. What happens with your KiwiSaver if you leave New Zealand? Now, you can't take your KiwiSaver in the sense that you withdraw it and then they drop it into your account back overseas. Let's just say you want to go to Australia. So you go to Australia, you join up with a super fund in Australia. That super fund you can approach to ask them to apply to your New Zealand KiwiSaver fund to transfer it over into that super fund. That's as it pertains to KiwiSaver. Of course, there are the other mirror fund options that I talk a lot about. I'm a big believer. You never contribute any more to KiwiSaver than you have to get your employer's contribution. So if your employer is contributing 3%, try not to do any more than 3% yourself to KiwiSaver. Rather throw more into a mirror fund because that is not locked in. All right, you can take it wherever you want. If you want to go back to South Africa, it's the same kind of situation. You can try to withdraw it out. And so they would look at the IRD, it would look at that then on a case by case basis. And so not everywhere in the world it has a qualifying super fund like Australia would. But yeah, I look at it as a case by case basis to see would they transfer it out then to an overseas account. A lot of the time they would, right? If you're going to say to South Africa and you know you're not coming back, you sign such a declaration, they would pay it back out to you. Okay. It seems like almost the whole of New Zealand got these letters from the IRD. Okay, I assume you mean the letters that they were changing the tax rate. Now, I've seen a lot of these as well from people who've reached out to me where tax rates have increased from 17% to 28%. If you are earning over $48,000 a year in income, you need to be on the 28% um, investor rate. Okay. And so a lot of people, what happens is they might start off a job and it's below $48,000. Over time, that can grow. And let's say you now hit the mark where you go over $48,000, but they didn't review their KiwiSaver structures, or they just didn't know to. And so they would then need to change them. They need to notify the IRD to be on a higher tax rate. And so it's best to, if you need help to try to figure out your tax rate, just let me know and I can give you some guidance on that as well. Is there any point in retirees having a KiwiSaver? Thanks, Shailesh. Yes, absolutely right, because it's appropriate that as you get closer to retirement, that your fund switch more and more conservative. If you were in a growth fund for many years and you've earned a lot of money, you're getting closer to age 65, review your KiwiSaver allocations, make sure that you're going more conservative to be exposed to less volatility at that point. You can take all the money out of KiwiSaver if you wanted to and just let it sit there in cash. That is an option. However, a lot of people prefer to rather take money out of KiwiSaver on a monthly basis and they leave the rest invested. So at least it's still in the market, busy earning a return and being put to work. Again, everyone might be in a different situation there. And so if you are getting closer to retirement and you need some guidance on your options, reach out to me. Yeah, look at the websites I'm easy to reach. Okay, I've got a question. What is a mirror fund? Great question. KiwiSaver, the great thing about KiwiSaver is that it's the employer and the government that's helping to fast track your savings for you. The problem is it's locked in, right? So you can only withdraw the money out when you buy your first house or you reach the age of 65. So what I found after having spoken to so many hundreds of people over a long time, most people do not like to contribute more than 3% to KiwiSaver because of the lock-in factor. They're worried about, well, what if you lose your job or there's some emergency and they have no access to emergency funds. A mirror fund is a mirror of your KiwiSaver. It means if your KiwiSaver is up 10%, so will your mirror fund be up 10%. It's another investment product. It works exactly the same as KiwiSaver, except there's no lock-in, right? Your employer and government contributions, they only ever go into KiwiSaver. So you continue to do that. You continue to do your 3%. Any more than 3% that you want to contribute, I would suggest look at a mirror fund because it helps give you more accessibility in the future if you needed to access your money. So think of it like a twin, right? It's a twin look of a KiwiSaver investment strategy. Very beneficial. Not all of the funds do it out there, actually quite a limited amount do, but if you need any more information out there, feel free to reach out to me. It's a very good discussion to have. Do you do investments into mirror funds, Paul? Yes, I do, mate. So I help set these structures up for my clients. And so I've got a lot of people now, a lot of people who are doing 10% contributions from their salary, but not only 3% into KiwiSaver. The other 7% goes into the mirror fund because they can access it if there's an emergency. And somebody recently, they had to withdraw some money out because needed new tires on the car. There was a fund available to do that. Okay, I'm earning over $48,000 and paying about 20%. Does that sound correct? I'm not sure what you mean by paying about 20%. Is it 20% tax, or is that your contribution rate? I'm not sure there. Another question: are you taxed if you withdraw your money from KiwiSaver? No, you are not. You're paying your taxes in KiwiSaver as you go over time. The money you're withdrawing out has already been taxed, so that's going to be tax in money in your pocket, right? So do you provide? Yeah, yeah, I do. What is my fee? I don't charge a fee. Right? I'm paid by the KiwiSaver provider. So if you look at NZ Funds, for example, I get only a 0.4% trail commission and a little bit of an upfront, a few $100 upfront, but that's paid by the provider, and all the KiwiSaver providers do this. So I've got a vested interest, right? If your funds do well, so does my own back pockets, and so I have a vested interest to see my clients do very, very well. You paying a 20% tax on your salary. Gavin, you and I need to have a personal conversation about that and just give you some more guidance. I need more information to be able to give you accurate guidance there, if that's okay. It just sounds like there might be more to that situation that I need to know about. Okay. Well, guys, it's running on to 30 minutes now. I don't see any other questions coming through at the minute. Just
Hi,
making.
Paul.
Yeah, mate.
Sorry, Werner here.
Right.
Just a quick one. If anybody would go through using you to support them making those decisions, and you help set up on whichever plan we need to use, is it just basically a once-off support, or would you be communicating and letting us know if there's any movement that we need to look at, moving the funds over to another bank or something? Just how does that work?
Okay, good question. So my support is ongoing. This is not a one-time engagement with me, and then I'm out of the picture. My goal is to provide long-term support. I want to be the one you lean on, the person you call when you have a question or you need something done. In the background, I'm constantly researching and looking at the markets. And so this is partly why I keep doing these webinars as well, is to get people better informed. If you go onto my website, I have my KiwiSaver Spotlight newsletter to keep people informed. And so from what I can see, I was one of the first in the country to even make people aware of the booster situation, for example, or somebody who's doing my own independent research of the top providers out there in growth funds. So to answer your question, I'm here all the time. I'm providing long-term support and guidance. And so, yeah, join my family there and you'll be very, very well informed into the future. All right. I hope that answers your question there.
Yeah, all good. Thanks.
Thanks, Vanna. Go well. Okay, I'm sure everyone wants to have the evening back. Gone for about 35 minutes. Thanks for your time tonight, guys. I hope you found that helpful. Again, just hit me up on the website if you need to speak to me or if you need any personal guidance. Would love to have a chat with you. Thanks for your time, guys, and take care out there. Thank you.